Hey everyone. So I thought I would talk about the virus like everything else. That's all I can talk about. My Facebook feed is just full of coronavirus. Um, but more specifically about how that will impact real estate investors. We still are pretty early on into this thing. I did a little video about it last week and kind of gave my opinion as to where we were. But now that we're officially on lockdown, it's getting even more serious. Real estate agents aren't allowed to go and show homes. I mean, technically, you could probably get away with it, but they're strongly urging people not to do so unless it's related to actually closing a transaction that's already in place. So showings are going to come to a halt. Although, oddly enough, inventory has gone up. I've always been croning on about how there's only 1,000 houses for sale in all of Austin for like the last 2 months. But that number has gone up by 337 homes just this past week. That's in the last 7 days. So this thing's been very real for the last 7 days. We've had more houses come on in the last week in Austin, 337 to be exact, than in the previous week, which was 193, and then the week before that was only 109. So everyone is, there's certainly the spring has something to do with that, but everyone is rushing to get their houses on the market before, you really can't do it anymore. So anything you list today, no one's really going to be able to go and see for at least 2 weeks, maybe longer, depends on how this thing plays out. So in my opinion, what I think this is going to do is inventory will still be compressed. I mean, I'm happy to see it grow, but at the end of the day, I think that some people may be scared to put their home in the market because of what's going on. So we might have seasonally adjusted and corona adjusted inventory that's still low. I would love to see inventory up to like 3,000 or 4,000 homes available on the market. To me, that would be more balanced. But right now we're still super low. I was honestly really surprised to see it as high as it is. It's at 1,249 homes right now. The bigger the stock market. So the stock market's crashing. The way I deal with the stock market, I treat it like 30-year money. So if I put $1 in the stock market, I'm going to keep it there for 30 years. So when the markets crash, I get really excited. I'm like, great, I'll just rebalance and buy stuff at a deal. And I know that those companies have real value and they will recover. But if you're buying a home or buying an investment property and you use the stock market to store your cash, then hey, now you can't buy anymore. So I think that the stock market crash is going to take some buyers off the table. Now, we still, before this all happened, we're seeing like, sometimes 10 offers, multiple offers in most cases, just because the demand is so high. There's so many buyers out there and the inventory was so low. So some of those buyers will go away, but the inventory is still really low. To me, what this is going to do is everyone's going to be holed up, regardless of whether you think we should, what you think we should do. When this all blows over, however long that takes, to me, the shorter the better, of course. So I would rather take the bitter pill now and have everyone kind of locked down for a month and have it be done. But I can't predict how that's going to happen. But once it does kind of blow over, then I think that what we'll see kind of a pop. So all of that pent-up demand for housing and people who want to and need to move is just going to come rushing back. So we're all sitting on our hands right now, but it's just going to, really explode in another couple of months. So that's just what I think. Can't predict it for sure, but that's what I suspect will happen. Even if you just look at just the regular market, nothing weird going on. Now, in terms of investors, there's always opportunity in crisis. So is there a chance to, buy stuff on the cheap? Possibly. You might have some of those sellers, just really absolutely positively have to sell their house now. All of the iBuyers have shut down. They've withdrawn all their offers. So you don't have any automatic cash offers out there anymore. So investors could come in and buy stuff on the cheap because they have to buy now or they have to sell now. You might have to be, willing to look at something and break the quarantine or be willing to buy something sight unseen. But, if the price is low enough, maybe that's okay. I don't think that they're going to be, all over the place, but certainly there's probably more of those opportunities just because some people will have to sell during the crisis. But it's also going to get harder to go out and take a look at them. Overall, in terms of the long-term view for Austin, I don't see it changing it a whole lot. In the short term, it's going to be painful. But in order for the market to really, shift a ton, you're going to have to see a change in either supply or demand, right? So a lot of agents are talking about the market's shifting, and certainly it is. We don't know what the long-term output of that's going to be, and everyone's kind of sitting on their hands right now waiting for the virus to resolve itself. But in Austin, at least, you're still going to have to see, like, we still have short inventory, we still have a lot of buyers, we still have net migration. There's still like 37 new office buildings that are being built downtown. There's still tons of employers, investing heavily in Austin, which is going to draw more people, and there's not enough building going on. So with all of those factors in the long term, I don't see enough evidence that Austin will, undergo a massive recession. Now, I could totally be wrong, but in order to be wrong, there's either got to be a big change in the inventory or a big change in buyer demand. So if buyer demand goes away because everyone's scared, and after the virus resolves itself, people decide they don't want to move to Austin anymore, even though all those jobs are coming here, which kind of force people to have a place to live. That could be one outcome, although I'm doubtful. And then the other would have to be like a massive oversupply of homes or a massive tightening of the supply of homes, which would still keep things really hot. So until I see more inventory, even with the virus, I don't think that really changes things in the medium to long term for Austin. I'm happy to be wrong, but that's just the way I see it, where we are now. Now, interest rates have also dropped down quite a bit in the past couple of weeks, and they're moving wildly. They're doing all sorts of crazy stuff. Normally, an interest rate might move maybe 1/8 of a point over the span of a couple weeks or a month. In the last couple of weeks, we've seen rates move a full point inside of a week. So it's gotten down as low as 2.875 and back into the threes. I think right now it's back at 3.1. So on the investor side, I think what that will do is that might make some commercial deals more viable than they would be otherwise, because hey, if those rates are really a point lower, that might be the straw that breaks the camel's back, so to speak, to allow a commercial deal to work that wouldn't work before. So there's some opportunity there. Also in multifamily, I think multifamily has the potential to get hit pretty hard because a lot of people who are in multifamily are working jobs that are much more susceptible to the coronavirus. So if you work at a restaurant and you can't go to work and you're not making income, then hey, you can't pay your rents. There are, I've already seen it in some of the multifamily stuff that I'm involved in where tenants are saying like, hey, I want a free month's rent. And I get it because they don't have their income, but then there's also the note on those buildings that has to be paid. So I don't know how far up that will go the chain to say like, hey, lenders, just give everyone a month or two off. It could happen that way. If it's just 1 month, it's probably not that big of a deal. That's survivable. But if everyone's in lockdown for 3-6 months, then multifamily might get hit pretty hard because people just can't pay their notes or can't pay their rent. Now on the residential side, one thing that's really cool, I guess, could be good or bad, is that there's news about being able to defer your mortgage payments for up to a year. Now, if you want to do that, you have to talk to your loan processor, not necessarily your lender, but the person who processes your loan, and call them up and you can ask for a deferment. Now, be sure to look at the fine print for any of those deals. Supposedly they won't impact your credit, but you never know. It could be just bait. Financial institutions are known to be crafty and put all sorts of language in there. So be careful what you're getting into. There's no such thing as a free lunch. So if you're deferring your payments, usually that means you might have to pay a little bit higher payment later on, or you're gonna have to make those payments up sometime next year. I don't know. It really just depends on your lender, but that might be a possibility. And there's certainly a lot of news coming out about not having it ding your credit if you defer your mortgage payments if you are impacted by coronavirus, et cetera, et cetera. So at that point, that's kind of where we stand today. There might be some opportunities for investors out there, but I don't think it's going to be like this buffet of like, oh my gosh, everything's on sale like it was in 2008, because in 2008 you had massive oversupply and super loose lending standards. Anyone could buy with a pulse, and there was just too much inventory out there. And then you had the credit default swap stuff on top of that. In this case, we're not seeing all that. The stock market is selling off, and that's going down, and there's a ton of money being pumped in to add liquidity and even keep mortgage rates down. But it's also too early to tell in terms of what lending practices are like, because you've got all these new low rates out. But so far, I haven't seen lenders reduce the requirements for getting a loan yet. Mainly because so many people are kind of spooked to buy anything. So we might see more as we come out of this. We'll see if the lenders change their tack on it. If they're going to be looser or tighter. But as long as lending standards still require you to put some money down and are not super loose like they were before, even in Austin, even if they were, there's nothing to buy because the inventory is so low. Then I don't see anything yet that would indicate that we would have a housing crash or anything like that in Austin. We would just need way more inventory than we have. So that's where we're at right now. To me, once the inventory gets up to like 5,000 or 6,000, that would be kind of like, hey, we're balanced. We're not in a tight inventory. And if we got to 6, 8, 10,000, then it would be a buyer's market. But we're so far from there, right? I'm just so far from there. So I think it's way too early to say anything like that. Right now, everyone's just recovering from the crash. Hold on to your shorts and just kind of like wait for this whole thing to blow over. And then we'll see what comes out on the other side of it. I should have more news in a couple more weeks. It's still a little too early to tell. Everyone's very fearful and kind of panicky about what's going on, and everyone's kind of like on pins and needles about like what's going to happen. And like just today is the Austin lockdown. Oh, hey Dave. With that, it's going to take like a full month at least to see like what things are doing and what the transactions are coming out, like what this buyer sentiment's going to be like. Are people letting their houses sit longer? Buyers not buying? Is more inventory coming on or not? So in just the last week, I've seen more inventory show up in a week than I have all year. So that's somewhat normal, but also kind of interesting, the fact that it's timed right with coronavirus. So in another couple weeks, we'll just see where we're at. In the meantime, stay safe, wash your hands, all that good stuff, and we'll just keep on keeping on. Just be prepared. Bye, guys.